Hello, today is Saturday, June 27th, 2026. Here is your daily signal. According to Fortune, President Donald Trump is now calling for an investigation into big oil donors for price gouging, despite crude oil prices returning to pre-war levels while gas prices remain elevated. The Iran war, which broke out on February 28, 2026, shut down the Strait of Hormuz, a key passage for 20% of global oil, and forced international governments to release emergency reserves to stem surging prices. Since the start of the conflict, American households have seen energy costs spike by an average of $447.19, totaling almost $60 billion in extra expenses. Gas prices hit $4.39 a gallon and diesel soared to $5.52, both up 47% since March, with the International Energy Agency mobilizing 400 million barrels from reserves. Economists warn these trends could push household energy costs near $2,000 within the year, with continued high diesel and jet fuel prices feeding inflation, restricting consumer spending, and potentially increasing household debt, especially as Middle Eastern production lags in recovery, prolonging elevated energy prices and disproportionately affecting lower-income families. Next, on to Wall Street, where Fortune notes that Micron's latest earnings have triggered a reversal in the global tech stock sell-off and exposed a critical factor for AI valuations, the so-called memory tax. The AI investment surge began in late 2022 after OpenAI's ChatGPT, yet today's market recognizes that rising costs for advanced memory chips are fundamentally changing how analysts value companies, causing Wall Street giants like Goldman Sachs and Morgan Stanley to update models for hardware spending. NVIDIA's quarterly filing revealed that over 60% of H100 GPUs sold in Q2 went to clients contending with DRAM and HBM costs, and Goldman Sachs' newest analysis shows the memory tax substantially impacting tech company margins and leading to widespread valuation revisions. This redrawing of earnings models means short-term volatility for tech stocks, but in the longer run, firms able to control AI hardware costs may tighten their grip on market share, while smaller startups face tougher funding hurdles. If the memory tax persists, traditional revenue growth valuation models could be replaced by new frameworks focused on hardware supply chains and operational efficiency. Finally, TechCrunch reports that General Intuition has raised $320 million as part of a $2.3 billion bet that advanced gameplay datasets can train AI agents for real-world tasks. Since 2018, structured environments in games have helped AI models like AlphaGo and OpenAI's Dota 2 bot gain strategic skills, with recent studies showing synthetic training improves decision-making transferable to robotics and logistics. Just published, DeepMind's partnership with MIT aims to share synthetic gameplay environments for joint research. OpenAI's results demonstrate improved real-world performance in warehouse robots after simulation training, and NVIDIA released a toolkit for integrating gameplay datasets into industrial robotics applications. The near-term impact will see companies deploying AI agents for logistics and autonomous vehicles to boost efficiency, while the medium term may bring safer, more adaptable AI for healthcare, construction, and public infrastructure. However, as these methods grow in prominence, they raise important concerns regarding transparency, privacy, and the risk of bias transferring from virtual simulation to the real world, shaping future standards for trustworthy AI. Now, onto the markets. European markets moved mostly lower today, with Germany's EWG down about 1% and France's EWQ off nearly 0.7%. United Kingdom's EWU slipped slightly, while Italy's EWI saw a marginal decline of 0.5%, and Spain's EWP was nearly flat with a small gain. Netherlands' EWN posted a drop greater than 1.7%, while Chile's ECH bucked the trend with a 0.6% rise. Belgium's EWK edged higher by nearly 0.3%, while Australia's EWO retreated more than 1.5% and China large caps via FXI fell by 0.28%. Japan's EWJ experienced a 0.6% drop but maintained slight month-over-month strength. India with India gained about 0.26%, and Taiwan's EWT declined by 2%. Hong Kong's EWH fell by 0.14%, and Singapore's EWS advanced just over 0.3%. Indonesia's IDX lost more than 1%, while Malaysia's EWM climbed 1%. Saudi Arabia's KSA, Qatar's QAT, and Kuwait's KWT all posted small declines, while the Arab Emirates UAE advanced by 0.7%. Israel's EIS dropped 1.6% and Africa's AFK rose just under 1%. Commodities saw gold's GLD advance over 1% and silver's SLV surge more than 1.7%, but US oil USO tumbled 3.5%. Platinum's PPLT jumped over 1.9%, agricultural products DBA decreased slightly, and carbon KRBN dropped by over 1%. Copper's CPER rose about 1% and natural gas UNG gained 1%. Corn and wheat moved lower, uranium URA slipped 0.7%, and lithium LIT fell more than 3%. In favorites, Adobe at best surged nearly 5%, while Microsoft MSFD advanced more than 5.7%. AMD fell over 2%, Nvidia NVDA lost 1.6%, and Oracle moved down 2.6%. Axon rose more than 4.5%, Amazon climbed 2.5%, and Apple finished up 3%. S&P 500 SPY slipped about 0.7%, Healthcare Roman 45 gained over 3%, Finance XLF was fractionally higher, and Real Estate XLRE gained more than 1%. Semiconductors stocks fell over 5%, Aerospace ITA declined slightly, Rate RWR rose nearly 1.2%, Transportation XTN was modestly higher, and Clean Energy QCLN dropped over 5.5%. That's it for today. You can find more news and details on our website. Goodbye.